Hey everyone, this is Kirk here again at OptionAlpha.com, where we show you how to make smarter trades. And in tonight's video, I want to go over all of the closing and then the one opening trade that we had for Thursday, March 5th. So as you can see, we had another profitable day of closing out a bunch of our positions. And really, I just wanted to take a minute and tell you that this is really what it should be all about. And I like when things happen like this. I mean, who doesn't like when they have an opportunity to close out trades at a profit? But we've been consistently doing this now for about a week and a half, where we're consistently every single day trying to close out one or two positions that we have that are starting to generate some money and starting to reach our profit targets. And that's really what the name of the game is about. It's about putting on a lot of trades and then slowly start managing those trades that are winners, holding on to everything else that's not a winner right away. And we still got a lot of things that are winners that we just haven't been able to get fills in to get closed. But this is really what the name of the game is about trading the right direction and the right volatility, and then slowly starting to close out these positions throughout the month. So as you can see, we closed out of both of our Iron Condor positions in USO today. This was really key. We tried to close these out actually yesterday, didn't have an opportunity to do so, but we closed out again both of our March and April Iron Condors in the USO. Basically, and I'll show you here in a second, USO had a drop in implied volatility, which really helped both of these Iron Condors because we entered these when implied volatility was very high, when option premium was really high. And we bought both of these back today for a 19-cent debit. So a nice $28 profit in the one Iron Condor that we had for March, and then 45 bucks in the three Iron Condors that we had for April. And again, here's a chart of USO. The stock has remained relatively sideways, but what really has started to help is this drop in implied volatility. You can see that it's now in the 67th percentile. So still very high, but considering we sold this around the 85th percentile, it's actually dropped considerably from where we actually entered this trade. And this just really gave us an opportunity to see some money start to really kind of flow back into this position. And look, it took a little while for implied volatility to drop. It kind of stayed up here as USO has kind of found a little bit of a base here, but now that it's trading sideways, you'll definitely start to see implied volatility continue to move lower. And if the stock does tend to head higher, we'll definitely see implied volatility move lower as well. But at this point, we're going to be happy with what we got out of these trades. And again, closing them out early is the best thing to do, especially the April contracts. There's just not too much left in those contracts to just hold on to for April. We've made the vast majority of what we could make on this position. It's worth it to close it out way ahead of time. The other closing trade that we did have today is the calendar in Baidu. This is a really good trade because we only had it, I think, for about a week and a half. So we bought a call calendar spread in Baidu, targeted this calendar spread around the 220 strike price. So we wanted Baidu to move higher. This was a position that we needed to add last week to kind of rebalance our portfolio, get us a little bit more positive delta in our portfolio. We needed a couple more bullish positions. And Baidu today was up pretty big, so this really helped the position. It kind of had a nice move in the premium. And so, as always with these calendar spreads, we're going to be a little bit quicker to take profits, especially with a calendar spread that costs as much as this original Baidu one did. And so we did close out that whole calendar today for a 286 credit, took a $71 profit on that calendar spread in Baidu. So when we look at the stock again, you can see didn't have the move up in implied volatility that we were really hoping for with a calendar, but we sure did get that move up in the actual stock price over the last couple of days since we entered the position. That really, really helped. And the reason that we entered the position a while ago was because we got this nice signal here that MACD was going to be moving higher. And so again, we didn't need to be in this position really long to actually see it kind of materialize into a nice profitable trade. Remember, our target was about 220, and it came very, very close to sitting there. We could have obviously held this position, but at this point, I don't think it's worth holding. We had a nice profit. It reached our criteria. If we want to continue to be systematic about how we make trades and exit trades, we've got to obviously take money off the table and bank that profit. Now, in replace of that, kind of in a way, we did go ahead and enter a calendar spread in P, which is Pandora. So I know this was a little confusing. Everyone was like, I don't know what the ticker symbol is, but it's right here. It's just one little ticker symbol. And so we did go ahead and buy the April-March 16 call calendar spread for $37 debit in Pandora. Now, Pandora has relatively low implied volatility right now. You can see it's down in the 11th percentile, so very low implied volatility, has a tendency to spike up much, much higher than where it's at right now. And we're playing this just a little bit directionally bullish only because, again, we need a bullish position in our portfolio. We can play this either way. It doesn't really matter, but we're playing it just very slightly directionally bullish. You can see the 16 strike is just barely above where the stock is trading right now. So it's actually more of a neutral to bullish strategy as we head towards expiration. And one of the reasons that we decided to do this, kind of make it a little bit more neutral, is the fact that there's only about 15 days to go in March expiration. So we don't have that much time. So for us to make a trade where our profit and loss diagram is all the way out here at say like an 18 strike and we need the stock to move almost $2, just seems unrealistic for 2 days. The stock hasn't been moving anywhere for the past couple weeks. It seems pretty unrealistic that magically all of a sudden it could move $2. So we're targeting this strategy just very slightly bullish over where the stock is trading right now at 1550. And this gives us a pretty neutral to bullish stance on it, and also allows us to profit very nicely if the stock just stays here for the rest of the month. You can see we make about $50 on this trade if the stock just stays right exactly where it is. No move up in implied volatility, nothing like that. So 1 or 2 strikes out of the money here. Very neutral stance on Pandora. So those are all the trades that we made today. As always, if you have any comments or questions, please ask them right below. And until next time, happy trading.